Broadcast. Bang! I want to welcome everyone to Global Markets Radio Daily Recap. I'm your host, Andrew Spanton. Monday, May the 14th, 2012, 4 p.m. Eastern. What a day. What a day. Numbers continue to be disgusting across the board. Greece continues to give uncertainty to the marketplace. And things heating up more in Syria. Not if you watched oil. Oil continuing to come under pressure as the dollar continues to rally. The S&P continues to sell off. Oh, baby. Sell in May and go away. I can't believe it was that easy. Unbelievable. Nice call, Dougie Cass. But looking at this S&P 500 chart, we look terrible. And I'll tell you, we've been futzing around. You got your pole, your flag, your poll now beginning. Oh, yeah. We look like we want to be down big tomorrow. The only good numbers out last night, Germans' wage prices were better. Germans are making more money. Oh, that's great. Home loans out of Australia a little bit better, but New Zealand retail sales disgustingly terrible. Industrial production out of the Eurozone falling off a cliff, although the revision was higher. Down 0.3%, was supposed to be up 0.5. Even more important, we got GDP, baby, coming out tonight. Look out below. But, just to make things clear, I am not so... I think we're going to be down big. And I think the numbers are going to be terrible. But if there was a time for Ben Burn Your Ass Off to come to the rescue and fly his helicopter around a little bit, certainly tomorrow would be the day. We got a G8 summit coming up. We've got EcoFin tonight. We have a litany of data that is due to come out tonight. So you look at this S&P, it doesn't look very good. And if I'm right in these numbers out of Germany, France, Eurozone, GDP terrible, German zoo terrible, EcoFin say nothing, more Greece uncertainty. That 37-year-old, they're not making a government. So when you look at this dollar index, breaking out, the wedge continues to fly. As we said on the weekly, as we've said on the daily, the first move was the fake out, and we continue to go up. Now, what we're coming to, where we're at, is a monster Fibonacci spot. We are right at the 50% retracement from the move back in 2010 to the lows in 2011. Something's coming, and we're breaking through. Hey, listen, we did it before, and we failed. Now we're doing it again. Big spot. And with the way everything's going out tonight, it looks like we're going to bust through. Haven't even taken out this high yet. But we are taking out that 50% retracement. We are gone. And when you look at the golden retracement, that's 82.50. 82.50. Oh, mama. And that certainly is looking more like... That's 83.50. But I have another channel line at 81. Should we take this channel line out? This doesn't mean that much, but it's certainly resistance. We could get definitely momentum. And with how broken out we are, the only resistance I see is back in 2010. 83. Certainly maybe even 82 is a spot. A lot of resistance at 82. So we break through 81, it could be a melt up. And when we look at some of these currencies, we look at the euro dollar, and again, GDP coming out 2 a.m. Eastern, Germany, look at an increase of 0.1%. That ain't much. France, a big fat donut, 0. Payrolls out of France, that's going to suck. Italian GDP is supposed to be down 0.6. Eurozone GDP is supposed to be down 0.2. I think it's going to be worse. So when we take a look at this daily chart of the euro, I mean, it could get ugly. I mean, certainly we're in meltdown territory. Certainly we're going to head down to the lows back in the beginning of the year, it would seem. And that's like 126.50. And I'll tell you, with the dribble down, we've only gone down 250 pips in the last 7 days. 1, 2, 3, 4, 5, 6, 7, 8, 9 days. We've gone down 400 pips. Okay. But it's been this dribble. We're due for a wipeout. We're only down 65 pips today. So we're due for a massive wipeout and possible hammer. I think we could have a monster reversal tomorrow, especially if we're down as much as I think we could be. 150 pips. Listen, Greece goes. You buy the euro with your eyes closed, but going into it, I don't think so. Euro sterling continues to break down. Very nice trade for us today. Oh, baby. Piece of crap. And again, the sterling dollar will not go down. You know, a good story out of Bloomberg talking today how now everyone's flocking into the pound because the Swiss franc is pegged. Now, I don't really get that because what I'm getting is a Swiss franc that's more devalued. Should there be more of a crisis, can they really hold the peg? And in that situation, I would do very well. Especially if Greece left. You really think the SNB is going to hold the peg on Euro Swiss if Greece leaves the euro? I don't think so. Not on my watch. Trade balance comes out on sterling at 4:30 a.m. Eastern. Supposed to be down 8.4 billion. I think the European numbers are more important. But again, the U.S. session, we have a ton. I mean, a litany of data. Oh, baby. And we look at this dollar yen. With bond yields continuing to slide, dollar yen with a nice little shooting star. Yeah, the weekly looked okay, but hopefully you sold the strength. Baby is going lower. Say goodnight. Say hello to Mr. Fibonacci. And Fibonacci says, we're going to the golden retracement. Follow the yellow brick road. And that's 79.17. Easy. Intervention talk 78. So you get risk off. And a lot of these yen currencies, like sterling yen, still going lower. Love it. This baby's ready to crack. And again, if the stock market does reverse, and you know, yes, you have New Zealand bad numbers, but Australia, they've had 2 very good jobs numbers. And yes, I know China industrial production a freaking disaster. Hello. But if it's a one-off, if it is a one-off, and China makes a comeback, and they did reduce reserve ratios again, and they have a lot of leeway as far as to spur growth, lowering rates. And if jobs, last I checked, creates wealth and GDP, and Australia's pumping them out like crazy, the only way Australia would really collapse, obviously if the stock market came in, or China really continues to slow, hard landing, then obviously all bets are off, and they'll be firing those same people they're hiring. And when you look at the same Fibonacci, as much as this 99.50 we said could hold, we are on the precipice of collapsing. Meltdown City. We could even get down there. But certainly today is a big day. If the minutes aren't very hawkish, and these minutes are pretty important, if they're one and done, then you can have a nice pop to sell into that Aussie. Now, again, no matter what the Australian minutes are, the market's still going to be down a lot. And in my opinion, if the market's down a lot, no matter what they say at the RBA, risk off, baby. Aussie gets smoked. So should we take out this 99.50, there's air. I mean, we certainly get down 98.75, 97 rather quickly. Now, again, that's predicated on stock market down big. Now, again, I'm calling for a turnaround Tuesday. But who knows how long the tail is going to be. Don't try buying them now, only to have them down in your face big. Remember, I think the futures are going to melt down on bad U.S. numbers. A ton. CPI, retail sales, empire manufacturing, foreign flows of capital, collapsing, by the way. Only up $10 billion. I can't remember the last time. 2009, when it was negative. And you look at New Zealand, and I know they're oversold, but they're going lower. You got a nice channel line here in the Kiwi. I'm drawing it for how long? We're going there. 76, baby. You can even do your Fibonacci says also. Right around there. Certainly lower tonight, based upon that Fibonacci. Dollar Canada, I think it's going to make a run for par 50, and it's gone, like the wind. Yes, they have great numbers. Yes, when risk comes back, you want to get long the Canadian dollar. Absolutely. But for now, in risk-off trade, it doesn't make a difference what your currency is doing. It's all about what the stock market's doing and the dollar. And this baby's ready to pop. Big time. Closing fairly okay. Fairly. This whole par 50. Big. Look at how many times we've tried. 1, 2, 3, 4, 5, 6, 7, 8 times. Holy crap. So watch for momentum. We go right to 101.50. Bang. Absolutely. Dollar Swiss on its way to 95. Thank you, sir. I have another. Obviously, it's only up 55 pips, but it's breaking out. It's gone, like the wind. There's nothing there to stop it. Hello. Got to get long. It might, 95 easy. Easy. Now, again, remember, a lot of this is predicated on this dollar index breaking out. And we get through 81. That's a huge spot. Remember, that's that channel line I broke there, and we're well clear of the 50% retracement. Are we overbought? Absolutely. But are we ready for a bar? The squeeze bar, they call it. The tail bar. Because I am calling for a turnaround Tuesday. We do get FOMC member Duke speaking. Maybe he has something interesting to say. Turn around the markets. But you get the markets down 200-300. EcoFin, they'll be calling Bernanke. Help us. Do something. Pound Kiwi continues to explode. On its way to 210. Unbelievable. It's going higher. Could we reverse? Absolutely. But again, look how oversold this baby is. They love the pound. Love it. But given where it is, certainly makes sense. Is pound Swiss breaking out? Thank God I stayed away from that one. Gone. And tomorrow, dollar Swiss hits 95. Look for a reversal on this one, too. I mean, the pound just continues to outperform everyone. Pound Canada even breaking out. Almost, but this one actually looks pretty good. I'm going to have to get long it. Pound's breaking out against everyone else. Why want to go up against the Canadian? Especially got commodity prices collapsing. Let me tell you, this might be the last one to go. Again, still love sterling yen short. To Australia, New Zealand. I still like Euro Canada short. Made a couple of shekels in that one. But again, look at this. New yearly close low. Last time was the beginning of 2011. I think we get momentum to the downside. But again, stay long dollar Canada. And those of you that did ask for the 1-week free trial, you should have gotten an email. Check your spam folders. I sent it from a different email address. And remember that email is good for the whole week. So just because you missed today, feel free to come in tomorrow. So, down. And then the TAT on Helicopter Ben to the rescue. But we'll be up so much by then, it won't even make a difference if we're wrong. Oh, baby. Try my product. 1-week free trial. Get the rest of the week for free. Join the new class. Info at globalfxllc.com. Voice of Forex everywhere. YouTube, Facebook, Twitter. Definitely follow me on Twitter. And regarding Jamie Dimon, I'll say again, as long as they're not using taxpayer money, I don't give a crap what they do. As long as what they do does not threaten the system as a whole, they could blow up the company if they wanted to. That's what the board of directors is for. That's what the shareholders are for. Not the government to get involved if they're making a proprietary bet within the law. As long as their bet is not risking the whole economic financial system. I think it's a joke. Jamie Dimon should be fired. Whatever. It's a J.P. Morgan issue. This is not a national issue, of course, unless there are government funds guaranteeing things and they're using government-backed money to do these bets, obviously. But to expect banks not to take risk in an interest rate environment that we're in, where they can barely make money on the spread, how do you blame them? And as I've said before over and over, there is no trade that is guaranteed. I don't care what someone tells you, who they are, what college and graduate school and business school, whatever they graduated from, even their track record. No trade is guaranteed. There's only one thing in life, and that's death. Oh, baby. Andrew Spanton, Global Markets Radio, May 20th. Watch out. The only voice you'll ever need, who truly loves to make you money. Hopefully you did okay. Get ready for more tonight. Try my product. Bye-bye.